Now, for presentation and disclosure class, an entity shall present and disclose information that enables users of the financial statements to evaluate the financial effects of discontinued operations and disposals of non-current assets. As I've mentioned earlier, it's important to separate the information pertaining to your disposal group because it would signal or it would inform the financial statement users that moving forward, these revenues or these expenses will no longer be part of our operations. Okay, and if we are disposing a substantial amount of assets, it would also tell the financial statement users as to our level of capitalization, class, as to our solvency and even liquidity as well. Two important terminologies being defined here, class, in number 31, component of an entity, and paragraph 32, a discontinued operation. A component of an entity comprises operations and cash flows that can be clearly distinguished from the rest of the entity, class. In other words, a component of an entity will have been a cash-generating unit or a group of cash-generating units while being held for use. Okay, this would normally be asked as a multiple choice question. You'll be given with a definition, and one of the choices would be component of an entity. Paragraph 32, so just take note of the definition, class. Paragraph 32, a discontinued operation is a component of an entity that either has been disposed of or is classified as held for sale and represents a separate major line of business or geographical area of operations, is part of a single coordinated plan to dispose a separate major line, or is a subsidiary acquired exclusively with a view to resale. Now, paragraph 33 is what is important for our subject, class. Okay, for discontinued operations, class, an entity shall disclose, this one is what is important, that there is a single amount in the statement of comprehensive income, class, comprising the total of the profit or loss from discontinued operations, the gain or loss from the measurement to fair value less cost to sell. Okay, this is when we are changing the carrying amount, class. Okay, so the profit or loss from the discontinued operation plus whatever gain or loss was recognized as a result of the change in the carrying amount of the asset held for sale. But what I want to emphasize, class, is that only a single amount is required to be presented. If this was not from a discontinued operation, class, an item of income would have been added, would have been presented together with all the other income as well. Item of expense would be presented together with a similar kind of expense. But here, for your discontinued operation, class, a single amount will be presented for everything already for the discontinued operation. Okay, so you do not present income, multiple lines for income, multiple lines for expenses for your discontinued operation. It would already be net, class. Okay, you will only present a single amount for everything that happens to the discontinued operation. Okay, and this is what I want to emphasize. Okay, a single amount. Please remember this one. A single amount is to be presented in the statement of profit or loss, class, or the statement of comprehensive income. And I want to emphasize that because as to the rule on the statement of financial position, class, for the presentation in the statement of financial position, class, as to the assets, class, the assets would be presented separately, the liabilities would still be presented separately. And many students, class, would get confused. Okay, they remember reading something about a single amount, but the single amount was supposed to be for your statement of comprehensive income. It was supposed to be for your profit or loss. But that's the only thing that sticks, class. So they just remember single amount. And the question now is, how do you present the assets and the liabilities of a disposal group? Supposedly, you present the asset separately, you present the liability separately, but because there will be a choice that only a single amount, net of the assets and liabilities, will be presented, then some students would be convinced that that is the answer. Why? Because they were remembering the rule for your income statement. But the rule is different for your statement of financial position. You do not present the assets and liabilities net of each other, class. The assets of the disposal group will still be part of the assets of the entire entity. The liabilities of the disposal group should still be presented in your liability section of the balance sheet of the entity. Okay, so do not compensate or charge your liabilities against the assets. Now, another thing to remember, class, is that even though it will be presented in the asset section, it should be separated from the other assets. What do I mean? If you have equipment, class, all your equipment will be presented under a single line. So if you have 10 equipment, you get the carrying amount of these 10 equipment, you add all of them, and the total will be the amount that will be presented for your equipment. But if your disposal group class includes an equipment, you remove that equipment from the group class and present it separately. So in your asset section, you will now have two lines for equipment. Equipment, the usual, and equipment held for sale. You will now separate the assets from a disposal group from the assets that are not part of a disposal group, even though they are of the same kind. So if you're selling a land, okay, supposedly all your lands will be presented under a single amount, under a single line item. Okay, but if you now have a land that is held for sale, it is still presented in your assets, but it will not be presented together with all the other lands. Okay, that's what you have to remember as to the presentation in the statement of financial position. The same is for your liabilities. Remember that your disposal group can have liabilities as well. Okay, the liabilities of disposal group will also be presented in the liabilities, but they would be presented separately from the other liabilities, even from those of the same kind. So if the disposal group has accounts payable, you do not include it with the other accounts payable. You will now have two line item for your accounts payable. Accounts payable for all your regular accounts payable, and the accounts payable which is attributable to your disposal group. Okay. For paragraph 37, class, this is more of an exemption, but which would be a good source for a true or false question. Any gain or loss on the remeasurement of a non-current asset classified as held for sale that does not meet the definition of a discontinued operation shall be included in profit or loss from continuing operations. Okay. So this just tells us as to where it will be reported and as to how it is going to be reported. Will it be part of continuing operations or part of your discontinued operations? An entity shall not reclassify or represent amounts presented for non-current assets or for the assets and liabilities of disposal groups classified as held for sale in the statement of financial position for prior periods to reflect the classification in the statement of financial position for the latest period. So in case an asset will be reclassified, class, you do not adjust the prior period, class. You continue to present it as held for sale, even though the present period is no longer held for sale. Okay, although this would not be an issue in problems, class. Okay, so just take note of this one because this could be a true or false question. So basically, that would be all for PFRS 5, class. We'll revisit PFRS 5 when we now talk about the rules on impairment and reversals and the rules as to the reclassification. Okay, when it was reclassified from PPE, for example, to held for sale, and from held for sale back to PPE. Those are the 2 points we have to talk about. Okay, but as for our takeaway, number 1, measurement, lower between the carrying amount and the fair value less cost to sell. Number 2, classification, it will be current asset. Number 3, what were our takeaways, class? Presentation. As to the results of the operation, single amount in the income statement, separate for your assets and liabilities. As to when will it be considered as held for sale, class? What were the 2 conditions? Available for sale in its present condition, and the sale is highly probable. Okay. And the fluctuations in the changes or the changes in the carrying amount, class, are to be presented in your profit or loss. Okay, so PFRS 5 should be the least of our concerns, because this is not a very complicated standard, except when we are now dealing with the reversals and the impairments, class, and the reclassification back to its original designation, class.